What I feel like I've learnt this morning from what's happened in the Indonesian rupiah and what happened with the peso yesterday is that rate hikes don't always work.
They don't work at all, particularly if you're too late to the party. Right. It's all about the timing. Where you have to be ahead of the curve if you want your rate increases to work, and your problem has to be monetary. It shouldn't be fiscal. What's happened in Turkey and Argentina and other places is that what started out as a monetary problem has become a fiscal problem, and the dichotomy between a growth-oriented government and a hawkish, eventually hawkish central bank, working at cross purposes against each other, and policy responses don't really work.
Yeah, and talk me through what's happening in the emerging market space today, right? Because every time we get a sell-off in one currency, we start questioning whether there's contagion. If I look on the Bloomberg and emerging markets against the dollar, right, the Indian rupee's been hit,
yes.
New record low. Yes. Rupiah hit. Of course, we've already talked about the peso, but the Turkish lira is actually strengthening in this session.
Yes. I mean, if there is any contagion, it is more sentimental, not fundamental.
Right.
And Turkey, we have been talking about a dead cat's bounce in the Turkish lira for the past 2-3 months. The nature of volatility is one day it goes up, but it doesn't mean that it is rebounding at all. Emerging markets have now become like this beautiful English breakfast where, the bacon is great, the sausage is great, the eggs are great, but there is a drop of poison in the orange juice. And that's making you not want to eat anything. Right, you are not inclined to look at value that exists all over emerging markets,
right,
because of this, poisonous corner. So it has to do with the heterogeneous nature of the emerging markets.
Mm-hmm.
But at some point of time, investors will start discerning and differentiating.